It's been reported that approximately 20% of market volume is now attributable to retail customers, which I think is just fascinating considering that's up from 10% in 2019. And that's an overwhelmingly positive development, allowing for more market liquidity, more stability, additional avenues for households to grow their wealth. And it's important to increase market access for retail customers. And I don't want to disrupt that if we possibly can. So I'd like to turn with my first question to Mr. Teniff. Let's talk about the attention that this pay for order flow has received. You explained in your testimony, Robinhood's relationship with market makers is important for Robinhood's ability to offer commission-free trading. So expand, if you would, on how that process benefits the everyday investor, and just expand in general on that, if you would.
Congressman, I'd be happy to. Thanks for giving me an opportunity. So as I mentioned in my written testimony, payment for order flow enables commission-free trading. Prior to Robinhood changing the industry standard model to be commission-free, most brokers collected a commission on top of the payment for order flow on every transaction. Now, Robinhood routes to market makers, including Citadel Execution Services. We've got 7 in total across equities and options. And we route without consideration for payment for order flow. All payment for order flow arrangements are uniform across the market makers. And our system routes orders based on who provides the best execution quality for our customers. So the reason Citadel gets a relatively high percentage of our customer order flow is because they provide superior execution quality for our customers. And that's first and foremost the most important consideration that we look for. How are our customers getting the best execution quality? If another market maker were to improve upon the execution quality that Citadel Execution Services provides on any subset of orders, our system is set up to automatically route more traffic to that market maker.
Continuing down this line, because clearly this is one of the things that my colleagues and the public has a very strong interest in. And having lived through Dodd-Frank before, I see where sometimes major things can occur. I want to turn to Mr. Griffin. Now, could you also elaborate on how payment for order flow provides, whether it's the best price to the retail investor from the market maker perspective? Could you expand on that? As you outlined in...
Absolutely, Congressman. So as the CEO of Robinhood just set forth clearly, the orders that are allocated amongst the market makers today are allocated principally on the basis of price improvement. We have fought for 15 years to make that the basis by how which orders are allocated, because we strongly believe that Citadel is able to provide a better execution for retail orders in the long run. We make a huge investment in our team and our technology to do so. How is it that we are able to provide better execution quality than exchanges? Because exchanges are limited in their ability to do business by regulatory mandate. Exchanges by law have a minimum 1 cent wide market, which for low price securities means that they are less competitive than they otherwise could be. We're able to
Joe, are you here and what are you doing?
Excuse me?
That wasn't either one of us. Continue, Mr. Griffin.
All right. So we're able to share our trading acumen with retail investors, and we're able to give them a better price, and we're able to make payments for order flow to firms like Robinhood that allow them to have lower, or today in most cases, no commission. And of particular note, we're able to help Robinhood and other brokers pay exchange fees to the exchanges at the time of execution. This has been very important to the democratization of finance. It has allowed the American retail investor to have the lowest execution cost they've ever had in the history of the U.S. financial market.
Shepard Smith here. Thanks for watching CNBC on YouTube.